So here we go, we've had the budget, the autumn budget that a lot of people have been fearing in the last few months, and today we're going to see if it was as bad as what it was expected to be. I'm going to cover a few things, and then I'll also talk about a couple of stocks that I did buy because the stock market did rally off the budget, as you can see here. I'll also be talking about a couple of stocks that I picked up while the budget was going on. So yeah, we finally had the budget. They are going to be raising taxes by 40 billion to try and make up some of the investments that they want to do into the NHS and other places as well. And overall, I guess that is a positive, isn't it? That's what I think we all sit here and we all go, we would like to see more funding for the NHS. We would like to see more funding for schools. And that was in this budget. We had the record increase in the NHS funding since I think it was 2010. We had also some good improvement in the funding into schools. Obviously, most of you guys will aware that I work in the education system, and they're also going to increase the budget for schools as well, with the core education budget going up by 2.3 billion, which is very much needed because the school system in the UK is not in a good place. So I think we all can agree there was some good improvements that is needed for the NHS and for the school system at the moment. And I think there was also increase in breakfast clubs as well, which is great. But obviously there is no money out there to do that. So the only way you are going to do that is by increasing taxes or increasing the borrowing, which is going on. So we're having increased borrowing and we're also having increased taxes. Now a good chunk of the tax increase is going to come from the increased national insurance contribution from employers, which isn't great. We're going to see a lot of businesses affected by this, and 25 billion will be raised from this, and that will be a 1.2% increase to 15% from April 2025. So yeah, if you are a business, you are going to feel this a big time. And for obviously the reason why the government are doing this sort of tax raise is because they don't want to affect you individually too much. The easier target is to go for the businesses, and they pay the gap that's currently going on in taxes. So that's going to be a big hit for businesses, because what we have is already higher corporation tax. We've had corporation tax increase from 19% to 25%, and now we're having to contribute with employees a lot more. It's going to sting as well. There was also a few other impacts on there, like the business rates that will expire with a 75% discount in April 2025 will be replaced by a 40% discount. So I guess that is not as bad as going to zero, but still another sting for them. And it's also worth pointing out that income tax and NI thresholds will rise with inflation. I've been calling this for a while, and will be no extension to the current freeze that's currently on them. There is also one of the promises that they said they were going to do, which was one of the confirmed ways that we knew they were going to raise taxes, is there's going to be VAT on private schools. I'm still very 50-50 on this one. I know people argue the case that people that are paying for private schools can afford it, but with the current issue that's currently on the public schools, and people might drop out from private schools and go back to state schools, would that potentially put a bit more pressure on them? I'm not sure about that. So it's one that I always am a bit 50-50 on, but we know this one has been in the planning for a while. It was on the manifesto when Labour was elected. A big one, if you are a property investor, there is going to be a big charge increase on second homes. So we are going to see an increase to 5% from tomorrow. So that is a big impact that a few people will see if you are buying second properties, which is probably going to hurt a few investors at the moment. So that's going to be a big tax for them guys. We knew this was potentially something that we're looking at, and that is going to happen. What was a bit of a surprise is they are going to carry on the relief on the fuel duty at the moment. So that means petrol will stay a little bit cheaper for a little bit longer. That is something that we did not expect to happen. There will be once again another increase in tobacco products as well. And in addition, we knew this was going to happen at some point. There will be an introduction of a flat rate duty on all vaping liquid from 2026. And they said that they are going to do a one-off increase in tobacco duty to maintain the incentive for smokers to give up smoking or switch to vaping. Realistically, the reason why is because they're going to lose a ton of tax on the tobacco products, and they need to make it up somewhere. So then they're going to throw it onto vaping. So that's realistically why they're doing that sort of tax as well. The big one, the one that we were mostly worried about, was capital gains tax. There was a lot of numbers thrown out what potentially the increase of capital gains tax would be. Capital gains tax is going to increase to 18% on the lower rate. That's obviously up from 10%, and 24% on the higher rate. That's up from 20% as well. So overall, I'm okay with that. I thought this was going to be a lot worse myself. I mean, we've seen numbers like 40% being thrown out. I think the common ground that a lot of people were thinking was somewhere between the 28 to 32% range. So the fact that this is the increase, I'm okay with that. We were thinking it could be a lot worse, and that's what I was worried about. So with them increases, I think that the market will react positively to that, and that is actually what we've seen so far. They did make a big statement about chasing up all the companies that profited from the COVID situation, and they will be getting money back from companies that benefited and took money from the COVID schemes that were not using it correctly, and also crack down on fraud. I mean, it's nice saying that, like, yeah, we all agree that this should happen, but the people that are doing these scamming or fraud projects to get money from the government, they're not going to be exactly the kind of people that if they appoint someone and they start chasing them up and they send them an email or give them a phone call saying it's HMRC here, you need to give your money back. They're not the sort of people that are going to go, hey, you've caught me, here you go, have the money back. It's going to be hard work to get this money back. So there's a bit of assumption there that they think they're going to get this money back from some of these fraud schemes. It's not going to be easy. I'm sure a lot of these fraud schemes are under a name of a dog in a Switzerland bank account. So they can try to get the money back. I don't think previous governments haven't tried this, but we'll see what happens from that point of view. Big one, the ISA side of it. As far as I've read so far from the awesome budget that came online, I cannot see any changes to the ISA. So there was talk about a cap on the ISAs, maybe a 50k cap on the ISAs. At the moment, I cannot see anything that suggests that there is going to be a cap on ISA allowances or how much you can have in an ISA through a lifetime. And also the annual subscriptions haven't changed. They are at 20,000. I still think they should be putting these up in line with inflation, but hey, I will take it because I thought it could be a lot worse. Just like the capital gains tax, I thought it could be a lot worse, so we'll take this here. And as expected, the British ISA will not be proceeded with. We had the feeling that was going to happen, and we see the confirmation here. So my overall thoughts with the autumn budget is that it wasn't as bad as what we thought it was going to be. We were kind of in between two marks of that it was going to be bad or it was going to be very, very bad. And I think we've come somewhere in the middle. Like, there was a few things we went, oh, that was a little bit worse than what was expected. We were at the higher end of the tax that we thought they would be looking to raise, but it wasn't as bad as what it could be. When we talk about 24% capital gains that you potentially could be paying now, we had a feeling that could have been all the way up to the 30% range. When we look at the ISAs, and there's not much change in the ISAs, so it wasn't great, but it wasn't as bad as what we were expecting, and I think that's why the market's rallying today. I do think Labour have been caught out a little bit here, because obviously they said they weren't going to be increasing taxes on working people, which they are doing, and we've also seen the statement that they're being thrown out of a 20 billion black hole has actually been pulled out now because they can't use it anymore, because it's been proven that Labour are also a big cause of why there is that 20 billion black hole currently going on. And I guess when you look at the current budget as well, obviously there's increased borrowing, which is not great. We've also seen a upgrade into the inflation. Inflation is upgraded and is to stay a little bit higher than was expected. And we've also seen a downgrade in this budget of GDP growth forecast, which isn't great. So overall, it wasn't great news out there for us today, but I don't think it was as what was expected. Now, getting on to the stock market part of it, the stock market reacted quite positively to it. And the reason why is because there was just so much fear baked in. Like I said earlier, there's fears of how high are these capital gains tax going to be? Is there going to be limit on ISAs? And it wasn't as bad as what we thought. It wasn't great, but it wasn't as bad. And that's why we had a bit of a relief rally as the budget was going on. And if you have a look at some of the stocks, a lot of the stocks were jumping up quite a bit. And today, as you guys know that are on the Patreon, I was buying a couple of UK stocks. I bought some before the budget and I bought some as the budget was going on, as I was thinking, this isn't as bad. Don't get me wrong, I didn't think it was great, but it wasn't as bad as what I thought it was going to be. So the first one was Gaming Realms. I actually bought this before the budget started. The stock actually opened up down. It's been on a terrible run as well the last couple of days. The stock actually opened up today down about 3 or 4%, and I thought, you know what? I'm going to have to go buy some Gaming Realms here. I just think the stock was down at like 9 times forward earnings, 20% growth company, clean balance sheet, a lot of cash on there. And I thought I'm going to buy, and I increased my position quite heavily. The stock has bounced up a fair bit since that time frame, so I thought I'd buy some shares into that one. YouGov, I talked about this one not too long ago. They came off good earnings and the stock is still way below where it was on the profit warning. So I thought, you know what, I'm going to increase my YouGov position. I think this is around about 12 times forward earnings. I did buy some war paint because this is now towards, I think, 11 times forward earnings and nearly 2% dividend yield for a company growing at 20%. So I did pick up some war paint and that's having a very good day. And the only one that's not having as such a good day is Money Group. That's around about flat on the day, but there has been some volatility through the day, as you can see here. So I did pick some Money Group up because it's around about 13 times earnings and a lovely dividend. So I did nibble a few after the budget, or before the budget and during the budget, and I thought I'd make you aware of those buys, guys, because I won't update it when I do the stocks I'm buying December edition, because obviously I bought them still in October. So I thought I'd make you aware of that one on the YouTube channel, because I won't be covering it when I do the stocks I've been buying series anyway. So yeah, overall, that's the budget that has been very much anticipated. Everyone thought it was going to be awful, and it wasn't great, but it wasn't as bad as what we thought. So we'll see what happens from here. We'll see if this calms the nerves down a little bit, because there was a little bit of nerves around what potentially could happen, and hopefully this kind of calms it down a little bit, and we can move on a little bit from here, and we'll see where we go going forward. So I hope you enjoyed the video, guys. I'll see you in a bit.